Hi everyone, let's have a look at my bullish and bearish medium time frame and low time frame Elliott Wave scenarios on Bitcoin. But I want to start with the fact that in 1 hour and 30 minutes at 2:30 p.m. Central East European time, we have high impact news coming out. So you might want to check your own time zone, but the red flags equal high volatility. So hopefully we get a little bit of a direction either to the downside or the upside, but at least a little bit of clarity on what scenarios are going to be most likely. As it stands now, this scenario over here is an ABC scenario where we are currently in a three-wave structure, which is then part of a wave B. So we expect price to move to the upside in this particular scenario. Now we do have a triple bottom just below us at 27.2k, the couple of lows over here. So potentially with the volatility coming up, we might see a move to the downside, grab the liquidity before then a continuation to the upside. That is one of the scenarios we have over here. We did bounce as it stands now on the 886, taken from the low of A to the high over here at 30k. And usually once the 886 is hit, I like to see a little bit of a reaction away from the 886, just like we had at the high over here. So if I go to this high, we had a touch of the 886, and then we moved quite swiftly to the downside. But so far, we are not seeing the same reaction here at the lows. Price is hanging around this 886, which usually is not the most bullish sign. But of course, I'll go through the low time frame scenarios in a second as well. But yeah, we hit the 886 and are ranging just above the 886. And we didn't yet manage to escape this white target box over here. Now we do have bullish divergences. These can of course be leading, especially on the higher time frames. We are on the 4 hour at the moment. The CVD usually is best used on the 15-minute or the 5-minute, basically between the 5-minute and the 1 hour time frames. We are now on the 4 hour and we have a bullish divergence between this low over here and the higher low that is created, while we have a lower low on the CVD. So if I go to the 4 hour chart and I zoom out, then what you see is we have the low over here, price creating a higher low, right? Because this is the bounce on the 886. But on both the yellow and the blue line, price has created a lower low, which is a bullish divergence. And the target for a bullish divergence is the triple top over here. However, CVD can also be leading. There is no indicator in the world, as far as I know, that has a 100% win rate. So if price continues to the downside and actually takes the low of A, then we call the CVD a leading CVD because it is leading price to the downside. So again, I hope the news at 2:30 p.m. is going to give us a bit more clarity on what direction price is going to go, which also means that for me, trading at the moment is quite risky. And currently, as it stands now, personally, I am in no trade. I'm just waiting for the news to happen. And based on the news and the reaction I see, I might or might not do something based on the strategy that I have developed for myself. Now, if the strategy means price going to the upside, then this area over here is an area I will be looking for between 30k and 31k, which also includes the blue target box over here between 30.2k and 30.4k. Now, if we then go to the triangle scenario, and I keep showing it, so in this scenario, and this is basically the bearish scenario, because the bullish one is we expect upside, the bearish one is basically we continue to the downside. So we then have this as a 5-wave structure, and then in this wave B, because this is then an A, B, C, we then have this triangle. Now, honestly, I don't like the triangle from an Elliott Wave point of view, but yeah, you never know. Bitcoin, triangles, patterns, whatever it is, volatility. Sometimes the rules are not all very well expected, but the sub-degree waves inside this triangle just don't match a triangle's like rules, basically, because you need 4 out of 5 waves in a triangle need to be zigzags, which is already not the case because this wave over here is not a zigzag, but also this structure over here doesn't look like a zigzag as well. So just based on that one rule, this is not a preference in my opinion. But in this case, this is then a wave A followed by an A, B, C, D, E, where eventually you're then looking for an impulsive move to the downside in a 5-wave structure. Now, it has to be said that if this is the impulsive structure, that has to be this like quite similar to this wave A, right? Because it's an A, B, C. Then so far what we're seeing is basically like a 1, 2, 3, maybe this is already 4 and then 5. But this would be a very, very short wave C compared to this wave A, because the target for a wave C is pulled with the trend-based fib extension from the high over here to the low to then the high of the triangle. And then you see the 1-to-1 at 25.9k, and at 25k we have the 1.236. That's the most common target area for a wave C. But if this is a wave 3 over here, and wave 5 needs to go all the way down here, it's a very long wave 5 compared to then a very short wave 3. Besides that, this wave 3 did not hit the common area, target for a wave 3, in this then being a wave 1 over here, wave 2, and then so a 1, 2, and then we're looking for downside for wave 3, where usually the minimum target is the 1.618, which has not been reached, right? So it's like this downside scenario is still, as it stands now, an alternative scenario for me. Yes, this could be a 5-wave structure, but is this then a 5-wave structure that is then mimicking this wave A for a lot more downside? In my opinion, it doesn't feel that likely. Of course, it's possible, you know, we need to stay open to the market because we can't control the market. We have our own strategy that we trade and our own plan. But based on probabilities, yeah, we could get another move down, and this might be a 5-wave structure, but then this might be an ABC, which makes a lot more sense to me because of the length of this potential impulse. So yeah, this wave 3 not hitting the target also makes this maybe an ABC. However, we go into that in the low time frame scenario. But with this scenario, we just basically means we go towards the downside. But another reason I don't like it, besides the triangle itself, is the fact that too many people are winning. So what makes most people lose? Well, the breakout traders shorting here, stop loss in the triangle looking for downside, and the people shorting in this range which has the stop losses above the high over here, all those people will be winning if price moves to the downside. Of course, you have the people losing that are the long positions, right? The people longing are the ones losing. But this being a triangle is very, very obvious. And usually if a pattern is very obvious, it tends to not play out. And if we move to the downside, well, it clearly played out, right? So my preferred scenario is to wreck as most people as possible by going to the upside, trigger the stop losses of the breakout traders, get the stop losses at the top over here. This then is a fake out of the triangle, so the triangle trend line broken, but then it moves back up, takes the liquidity before then continuation to the downside. That is still my preferred scenario, whatever happens with the news. Even, you know, if we go down, that's all good, all fine. But yeah, this is what I would prefer to happen. But hey, I don't control price, right? Unfortunately. If then we look at the more local structures, well, we have this being an ABC, and then this has to be the low of C. Like this whole range, in my opinion, cannot be part anymore of an ABC over here. So this has to be then the end of wave C, ending inside the most common target area for a wave C as well. And we then expect upside and not this low being broken of this wave C. So after this wave C is in, we now expect a move to the upside, and we don't want to see that low broken. And yeah, that is basically scenario 1. And the second scenario on the low time frame is this one, where this is then a 5-wave structure in a 1, 2, 3, 4, 5, right? Where then again, this wave 3 is very short for a third wave in an impulsive structure. So then we expect another move to the downside, grabbing liquidity from the triple bottom before then moving to the upside, in this potentially being an ABC. However, I have one very big problem with this scenario, and that is that this has to be then a W, this has to be an X, and this very big structure has to be a Y, and it just doesn't make sense that this very long structure in comparison to a shorter X and even a shorter W is even legit. So I was almost actually binning this scenario before making this video, because for me I almost want to say it makes more sense that this triangle then is more legit and we move to the downside than this count being a WX and then eventually a Y. But a WXY can have many different like forms, and yeah, you know, it's just one to have on the chart. As you notice as well, I am not too clear on the direction of Bitcoin. I have a preferred scenario moving a little like to the upside, but I'm not in a trade. I'm waiting for the news. And I think the news hopefully gives us some volatility that then can be traded in either direction, up or down, based on your plan, based on your strategy, right? So the news at 2:30, hopefully we get a little bit more clarity and insight on the direction Bitcoin wants to take, because if we look at the lower time frames as well, yes, we have the bullish divergences on the 4-hour, but if we then zoom in to the 15-minute, yes, we had a bullish divergence here between this low and a higher low made, and then a lower low on both the blue and the yellow line, which is a bullish divergence. It already played out because this high has been taken, and now price is moving to the downside. But as you can see, since this high, price is moving to the downside, but the yellow line over here is moving to the upside. So now we are creating bearish divergences. Of course, these can be leading. If price is going to push to the upside and breaks this high, then these divergences, bearish ones, are invalidated. But as long as that doesn't happen, we have bearish divergences. So yeah, bullish and bearish on the lower time frames, and also with the scenarios, we have the bullish and bearish scenarios that, you know, are starting. We need a bit more clarity, I suppose, and I guess that many viewers with me are hoping for a bit more clarity anyway. That's probably why you're watching this video as well. So hey, I hope this video was helpful still or valuable to you. I think at 7 p.m. tonight, the next update will provide a lot more clarity. Let's hope so. Please check out the macro and high time frame video if you're interested. And for now, thanks for watching and subscribing, and I will see you at the next one. Bye bye.